housing market feels frozen right now. You're not imagining it. You're not seeing a crash. You're not seeing rebounds. You're just seeing nothing. Listings sit, buyers are hesitant, and everyone's feeling kind of stuck. And if you've been waiting for a clear signal, buy now or wait longer, the silence is honestly the most stressful part in all this chaos. Because at least chaos gives you something to react to. When there's nothing, there's nothing. A lot of Canadians are what I'd call a decision freeze. Buyers don't want to overpay, sellers don't want to sell for less than they think their home is worth, and homeowners don't know whether to act now or ride things out. And this tension has created something unusual in Canadian real estate. It's not a crash, it's not a recovery, it's more of a standoff. Some economists are calling this a waiting game. And the phrase matters because it explains why nothing feels like it's moving, even though everything feels so incredibly heavy right now. When I talk to clients right now, first-time buyers, move-up buyers, homeowners facing renewal, they all ask different questions. But underneath all of them is the same thing. Am I about to make a mistake if I move or if I don't? Here's what I want you to understand. This isn't a market that rewards bold guessing. And it's not a market where waiting automatically protects you. It's a market that rewards preparation. Let me explain what actually goes on and why that matters more than predicting prices. According to major lenders and economists, Canada's market hasn't really done anything in recent months. Even after rate cuts in the fall, national home sales barely moved. A slight dip one month, a slight bump the next, but really no momentum. And that's unusual. Normally, when rates come down, activity picks up. More showings, more offers, more pressure. But this time, buyers didn't rush back in. And the question is why? Well, it's because many buyers still believe that rates might fall further. And when people expect something better later, they'll wait. At the same time, listings have been building, especially in places like BC and Ontario. More sellers are testing the market, more investors are exiting, and more homeowners realizing today's payments don't match yesterday's assumptions or expectations. That's shifted leverage, not dramatically, not overnight, but quietly. Buyers are pushing back, sellers are negotiating, prices in some areas are drifting slightly lower, not collapsing, just softening. This isn't panic, it's caution meeting reality. Here's where a lot of people get tripped up. This is not a national story anymore. In some markets, especially parts of Ontario and BC, activity feels heavy. Buyers hesitate, inventory lingers, affordability is stretched. In other markets, including parts of the prairies and Alberta, things still feel pretty competitive. Supply is tighter, prices are holding or rising, and that's why headlines feel contradictory to other headlines. One city feels frozen, another feels balanced, and another one feels hot. And that split is expected to continue. What matters now isn't what Canada's doing. It's what your city, your street, or your numbers are doing. Here's a subtle but important shift happening right now. Buyers didn't move when rates were cut, but expectations are changing. The Bank of Canada has started signaling that rate cut cycles may be largely done, at least for now, and that matters. Not because rates are suddenly cheap, but because certainty changes behavior. People struggle to act in uncertainty. That's just plain and simple. They can plan around stability, and that's why when we see more stability, we see more activity and action. That's why many economists expect pent-up demand to unlock slowly heading into 2026, not all at once and not everywhere. This isn't a boom setup. It's more of a slight reset. And in a reset, risks don't disappear. They just move. The risk isn't waiting forever. It's pricing based on hope instead of reality. And for homeowners approaching renewal, the risk is pretending that nothing has changed. Many Canadians are renewing into higher payments, cash flow tightens, and doing nothing becomes a decision, often an expensive one. This market doesn't reward guessing, as previously mentioned. It rewards readiness and preparation. So if you're feeling stuck right now, here's the takeaway. The market isn't asking you to predict, it's asking you to prepare. To understand your affordability today, to know your renewal risks, to know your buffer, and to know your options. Because momentum will return, slowly, unevenly, and generally locally through different parts of Canada. And when it does, the people who feel in control won't be the ones guessing. They'll be the ones who are ready and make those decisions and moves. If you want help understanding how this market applies to your unique situation, whether you're buying, renewing, or planning your next move, that's exactly what I do to help my customers. Not with predictions, but with clarity. We've helped over $2 billion of mortgages, and we're more than happy to sit down and try and help you figure out your exact numbers and what to do next. So drop your biggest questions in the comments below. We'll do our best to get back to you and try and answer those questions for you. Or if you'd like, you can use the link in the description where you can book a call with me or a member of my team where we can sort of take a look at your situation, see what we can do to help you out. You don't need certainty in this market. You just need a plan. Thanks so much for watching. My name is Myles Nowik, owner of the Nowik Mortgage Team, powered by Indy Mortgage. We'll catch you on the next one.